Well, all those TVs do appear to be paying off for advertisers. On assignment for Bloomberg Television this week, Willow Bay caught up with Rupert Murdoch's new #2 man. That's Chase Carey. He is the president and COO of News Corp. She asked him about the ad industry's upfront season.
Certainly right now, the advertising market, is very strong. I mean, we are, whether it's against scatter, where we're probably up double digits. Certainly, you look at a year ago, we're up even more now. Obviously, that is compared to a relatively weak time, but it is a very healthy market. Certainly leads to strong expectations, for the upfront. And I think it's more than just the momentum in the market. I think you've got a lot of sectors where you have real competition, whether it's telecoms or electronics or retail, that bode well, for this marketplace. I still think you also have a dynamic in the other way of, people believing the economy's not out of the woods, so we'll have to see. And if we can't get the right price, as we did last year, I think we're comfortable going into the scatter market. And the scatter market has enabled us to, get, certainly double-digit increases against the upfront. But we expect the upfront to be good. But likewise, we're not, I think TV, if anything, I think has proven once again the unique value of television advertising. And everybody keeps on wanting to find new mediums and new places and put it online where you get more targeting capabilities. But TV has continued to stand the test of time. That if you want to get your brand out there and get your product, really noticed and valued by customers, TV advertising is second to none.
Let's talk bigger picture News Corp. You have some roughly $7 billion of cash on the balance sheets. What do you said that you were exploring what to do with that cash. What are you thinking?
Yeah, I really said discussing. I mean, and look, I think we know we have a cash-rich balance sheet, and we've acknowledged it. In some ways, it probably emerged out of an incredibly challenging economic time where we thought it was appropriate to be conservative. We're not out of the economic woods, but we know we've got a cash-rich balance sheet, and we have said we are actively talking about it, internally with the board, and expect to address it. And probably wouldn't put more of a timetable to it than that.
And do you have priorities for at this point, a set of priorities? Are you looking at acquisitions?
Again, I'm probably not going to get too far ahead of the conversations we'd have privately. I mean, although I generally would end up saying, we have been successful building businesses, not acquiring businesses. I think that is something we'd like to, continue to. I think that is how you build the most value, is by building businesses. We are not a company that has strategic holes. So if there are opportunities, we're certainly going to pursue them. But we're going to be judicial. We looked at a couple of things in the last year, and when the price got to a place that we didn't think there was enough upside in it, we passed. So I think we're going to stick to our mantra of really looking for businesses we can grow and build, and creating value that way.